Okay, welcome back. So now we're going to do the 2017 question 1 part 9 here. It says, no record has been made in the books for goods in transit on the 31st of the 12th, 2016. So goods in transit is goods or stock that was in the back of the truck on the way being delivered to somewhere. Either goods in transit could be goods that are on their way to you or on their way to a customer of yours that you've sold the goods to. The invoice for these goods has been received showing the recommended retail selling price. So if we have received an invoice, it means these are goods that we purchased. If we were selling the goods, we'd be sending the invoice out to a customer. So since it says invoice has been received, we're talking about purchases here. Showing the recommended retail selling price of 16,000, which is cost plus 25%. So really that recommended retail selling price is no good to us when we're talking about purchases, because our purchases, we want to know what their value is at cost, not at selling price. I mean, that's a recommended selling price. We may end up selling it for more or less, whatever we decide ourselves. But as far as our accounts are concerned, we need to know the cost price. So the first thing, we have to do a little bit of workings. So 16,000, they say, is 16,000. They said is cost plus 25%. So it's 125% of cost. Cost being 100%, so cost plus 25% is 125%. So then if we try to work out what 1% is, and then 100% rather, then we'll know what cost is. So again, if I divide 16,000 by 125, gives me 128. And then if I multiply this by 100, I get 12,800. So that's the cost price of the goods that were in transit. So the next thing is, how should that affect us? So no entry was made in the books. So first of all, our purchases should go up by 12,800, full amount. Also, if it were a cash sale, then our bank would go down by 12,800. But we assume when we hear invoice, we assume that it's a credit sale. So since it's a credit sale, it's our creditors we owe, or sorry, a credit purchase, I should say. It's our creditors that goes up because we owe more money for those purchases because we haven't paid for them yet. We bought them or we purchased them on credit. So it goes up by 12,800. And that balances just fine. Plus 12,800, plus 12,800, that will keep your books balanced. But there is more. Because those goods were in the back of the truck at the end of the year, it says on the 31st of the 12th, 2016, that means they weren't counted in our end of year stock take, which means that they weren't included in our closing stock. So again, we value closing stock at the lower of cost and net realizable value. So in this case, at cost. So our closing stock needs to also go up by 12,800. It needs to be increased because it wasn't included in our stock take. And also then, if to balance that, we have our closing stock figure in the balance sheet up by 12,800. And that's it.